Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents Wall Street doesn't want you to read. Today we are looking at the latest quarterly report from Aether Holdings, and trust me, this one has more twists than a bad M. Night Shyamalan movie. Prepare for a financial journey that's less smooth sailing and more white-knuckle roller coaster. But before we dive into it, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Aether Holdings ticker symbol Aether just went public. So this is one of their first reports. In this report, they are required to tell us everything that happened financially in the last 3 months and the last 6 months. They started in 2023 and they operate through their subsidiary, providing research and data for equity traders. Let's see what's been going on at Aether. All right, let's dive into the numbers and see what they tell us. First off, let's look at the balance sheet. They show that as of March of 2025, they had about $193,000 in cash. Compare that to September of 2024, when they had about $557,000. That's a big drop. Now let's check their debts, their payables, and accrued liabilities. Think of it as simply bills. Here we see that they owe $151,000 compared to only $31,000 in the prior reporting period. Here's a good sign. The deferred revenue, money they have for services they haven't provided yet, also increased from $380,000 to $395,000. They have contracts and money lined up. Overall, what does this mean? The total equity, what's left after debts, is negative $596,000 compared to positive $116,000 back in September. They had a good amount, but now they are in the red. It's important to note this report also points out that they had an IPO and completed it after this report was written, which is what allowed them to stay in business. So those numbers should turn green soon. Now let's turn over to the income statement, which shows revenue for the 3 and 6 months ended in March. For the 3 months, they pulled in about $341,000, and for 6 months, about $696,000. After subtracting what it costs to deliver their product, gross profit, that's the real money, came out to $22,000 for 3 months and $479,000 for 6 months. Now buckle up, because operating expenses are where the story gets interesting. General and administrative expenses were $560,000 for 3 months and a whopping $1,000 for the 6 months. That's a lot of money and way more than their gross profit. That's how they ended up at a net loss of around $390,000 for 3 months and $712,000 for 6 months. And how did this impact their shareholders? That comes out to a loss per share of $0.07 for 6 months, hence 6 months. Jumping over to the cash flow statement, the most important of all 3 numbers, the statement shows that they used about $361,000 in operating activities for 6 months and had very little activity in financing. That's why they ended up with a cash balance that was down $364,000 for the period, which we saw on the balance sheet. Now it's time to move on to the notes, where we get more details about these numbers. There was a reverse stock split of 1.2 for 1. In short, the reverse split means that every 1.2 shares became 1 share. Companies do this to increase the share price and make it look more appealing. Looking at related party transactions, companies are required to disclose if they are doing business with company insiders. Here we see a list of these insiders who are the executors. Also, it is noted that they acquired a short-term loan with an annual interest rate of 5%, and that loan was subsequently settled in April. Now, this is very important. They want to make sure you understand that the financials would have been really bad if it wasn't for the IPO that occurred after this report was written. So what's the overall picture? Aether is a very young company. In the red, but is pointing to a bright future because of their IPO. It's a high risk, high reward situation, and it will depend on whether they can grow sales while keeping administrative costs under control. The administrative costs appear to be high due to the executive salaries, although there are no issues of the company hiding this fact. It's all pretty transparent from the report. They might be betting on high growth or need time to adjust the cost with their level of revenue. Now, what do you think about this stock? Would you invest? Let us know in the comments, and make sure to check out the Discord link in the description. Hitting that like button helps us keep the channel going. Thanks for watching and see you next time.